Hello friends, this is my first recording in OBS. I had some hard time doing the settings, so finally I learned. I tried doing live streaming, but I was getting my sound back kind of echo. So that's the reason I'm recording it, and I will fix that issue as well, and then later I will also come on live streaming. So I have something for beginners. If you are beginner, then this video is for you. So let me take you to the chart. If you don't have time to understand how to trade because you might be working, so few basic things that I'm going to teach in this video that will help you to start learning to understand the charts. So if you understand the charts, then it would be easier for you to do the right execution, to take the right trade. Because some people, they will just randomly take the trade, and if it goes wrong, there will be huge losses. So to avoid that, it is important to learn the basics. Now you could see that this was yesterday's Friday's chart. So let me use the brush here. So market was in this range. This was Friday's chart, and you could see that continuously market was going upside, so kind of uptrend. It came till here. Let me change the color, and then it went little sideways and it stopped here. So this particular range, market was in one direction, that means it was in one range. So this is one range, market was in one range. So whenever the market is in one range, you should not do trading. So whenever market is in one range, you should not do trading. You should only do trading when you could see swings happening. But if it is in one range, what will happen is your stop loss will get hit and premium will decay. So premium decay is nothing but if the LTP is going 150, it will not grow much, but it will reduce. So it will come till 141, then it will reduce to 138, but the level of the candles would be the same, in the same range, but the price will reduce. So that is called as the premium decay, we call in simple words. So price will decay. So price when decays? When there is expiry in any of the indexes. So if there is expiry, it will affect the other indexes as well. So make sure that you don't take trade when the market is sideways. So let me delete these drawings over here. Now what is swing? First we need to understand what is swing and when swing appears in the market. So for swing, you need two contrast candles. So one candle should be, suppose one candle is red and the second candle should be green, or the first candle should be green and the second candle should be red. So we need these two candles to understand whether market is forming a swing. Now let's look at this particular chart. Now you could see that market went downside, and there was one more candle up here, and after that one more candle up here. So 3 candles are red candles. So after the third candle you could see one green candle is appearing. So whenever the contrast you see here, there is a probability that swing is getting created. So here you could see the green candle and the market went up. So there was a kind of, first market came down and now the market came up. So what is the formation happening here? Swing formation happening. Now the market went up. So here you could see that the market went up and it made another green candle, and then this red candle you could see. So this one candle, it has small body, we can call it as flesh. So it has small flesh, but it has big wick. Wick is nothing but we call it as a line. In other words, we call it as shadow. So it has shadow but small body. So this candle, kind of doji candle, when it appears, so we will not be sure whether market will go up or market will go down when this kind of candle appears. So let me highlight it and show you. So you could see this red candle, small body, but the wick means nothing but the line, a big line. Okay, so now in this case, how you will understand whether the market will go up or not, whether market is bullish or bearish? So first thing I would like to tell you that don't trade when the market starts at 9:15, because 9:15 is a time where you will not know which direction market is going, because it is the time where it will try to form swings. At least help the market to form swings, and once the market forms swing, then you will understand which direction market is going. So now what happens is, suppose if I have taken trade here, suppose the market opened here and I have taken trade here, because I could see that this is the previous day closing and this is today's opening. So here is a gap. Okay, so I thought market may go up, so I have by mistakenly taken, soon after the market opened, I have taken call side trade. But what happened? One big candle happened, then another second candle, then another third candle. So market went till S2 level. So this is pivot levels, S2 levels you could see. We can use the indicators and draw these yellow lines. So market went so down. So what happened is your loss started in the first trade as well. So loss started here, and what happens is then you have to end up the trade in loss. Then the second time what happens is you are waiting for the candle to become green, and then all of a sudden this red candle happens. Then you will think that market is again trying to come down. So your stop loss may get hit, or you may hold on to the trade. So it might be a kind of a risky trade for you, because these candles are made after the completion of the market, but when the market is live, the candles would be fluctuating, and they will look very very dangerous, especially in 5 minutes chart. So now you could see these small candles, but in live chart, if you turn on 1 minute chart, then you will see big candles, and they will be going up and down. So that's where most of you will be in confusion whether market will go up or down. So what is happening over here is, now you could see the time for this red candle. The time is 9:40. You could see the time is 9:40. That means at least 30 minutes you need to wait. Let the market form first swing or second swing. So when the market forms first swing or second swing, that's the time you will understand which direction it is going. So now how to understand whether it is bullish or bearish? So let me teach you that. Again, let me delete these drawings. If you're new to my channel, consider subscribing, and also press the bell icon so that I can bring up more learning videos for you. Now let's understand whether the market will go upside or downside, but nothing is definite. There might be probability looking at the first and second swing. So what happened is, market opened here, it went down, again it went down, again it went down, and after that one green candle appeared, but this green candle did not break the high of this candle. Then after that second candle appeared, and that second candle was not going up, it was trying to come down, and after that third red candle appeared. So what we have to do is, we have to wait. In this particular region, we have to wait. Whenever there is a doji candle which has just the shadow, but less body, whenever you see a doji candle, what you need to do is wait for the next candle in 5 minutes chart. Wait for the next candle and see whether the candle breaks the top of that doji candle or the bottom of the doji candle. So if it breaks the top of the doji candle, so there is a probability that market will go upside. But every time this technique will not help, because if big player comes, they can move the market anywhere, but there is a probability that market can go up because it has broken the top of this doji candle. So that is your first confirmation that market will go up. So what would be your second confirmation? Second confirmation would be this first candle. So when the market is breaking the top of the first candle, that is your second confirmation that market may go up. So now you could see that market is in this range. It broke the top of this doji candle, also it broke the top of this first candle of the day, and it made a higher high. Higher high is nothing but this was the previous high of the swing, and then market went high than the previous high, so it broke the previous high, so it became higher high. So now market formed a higher high. Okay, but here what's the trapping happens? So when the market forms higher high, what people would do is, people will try to take C side trade because it is going upward, and they will try to put a stop loss at the bottom of this candle, this green candle, and the players of the market are very sharp. So what they would do is, they will try to take your stop loss. So how they are going to take your stop loss? because they know that most of the people, what they would do is they will try to put the stop loss where now it has broke the it has made a higher high, so their stop loss would be somewhere here. So that's why what happened, this red candle broke the low of this candle and took the stop loss of the people. So whenever you put a stop loss, make sure that you should not put a stop loss close to the wick of the candle, because whenever the next candle becomes, what happen is it will try to come down and it will try to break the low of that previous candle. So the stop loss should not be here. You should keep the stop loss in your mind. You can exit, or you have to give a big stop loss over here. So somewhere like you could see this low of this candle, so somewhere here you have to give a stop loss, otherwise here your stop loss will get hit. But to give this much big stop loss will not be idle, because you need to also get 1:1. If 1:1 if you are trying to achieve, then the stop loss will be big, because you are giving a big stop loss and trying to get less points from the market. So don't make entry over here wherever you feel that the stop loss is big. But if you have guts that it will go up, then you can give a long stop loss. Keep long stop loss whenever the trapping situation happens. Okay, so now what I would do personally is I would not manually put a stop loss over here, because in the morning volatility of the market will be more, so it will try to take your stop loss. So I will just work on my entry points where I should see that the market is becoming stable and it will not take my stop loss so easily. Okay, so now what next I have to do is I have to wait. Whenever the market is forming the higher high, don't rush to take trade. Wait for the market to come down, and let's see how down it can come. So when the market comes down, wait for some time. Now it has made few small candles. Okay, so when you see the graph is slowly trying to go up, now you could see that these candles, they are trying to slowly go up. So you can use a trend line over here like this. Use a trend line over here. Okay, and then what you can do is, once you make a trend line over here, you can put a stop loss here below the trend line and try to make entry in this particular area. Okay, so when you make the entry, what would happen is, here is a gap which market has to fill. So market has filled almost 20% of gap by making a higher high over here. It broke the day high and made a higher high here. So 20% gap market has already filled, and now the second confirmation is the candles are moving upward. Okay, so the graph is going upward. So whenever the graph is going upward and market made a top over here, and only a little is remaining to fill this gap between yesterday's closing and today's opening. So in that particular case, you can take a decision that there is a probability that market will go up, and you can play a positional trade over here. You can do positional trade. Positional trade, that means if I'm taking entry over here, if I'm taking entry over here in this particular range, then what I would do is, my positional trade is, I want market to come to this level. so that it will fill this gap. So market when comes to this level, I will exit my position. So this will be my positional trade. So I will wait. So I'm waiting, and only little is remaining for market to touch this line. But you could see suddenly a red candle appear. If we zoom this red candle will look very big. In live market, these candles of 5 minutes will look very big. So it is coming down, right? But we have a trend line over here. So as long as the market is above the trend line, and you could see this blue line, I'm using indicators 9 EMA. So here is the section, indicator section. You can choose indicators of your choice. So I am using 9 EMA indicator. So if the market is sustaining above the 9 EMA, or if you have a VWAP, if the market is above VWAP and the candles are running above the trend line, then you can hold the trade and wait for your target. Okay, so now what happened is market did not reach the top of this, but it filled the gap. It filled the gap here exactly. You could see this green candle, exactly it filled the gap. Then after that, suddenly one red candle happened, and it went up to 60% down of this green candle. So people might have got scared who might be holding this trade, because suddenly this red candle came down. But as per my observation, whenever market is filling the gap, it will try to make a top. Now this is the gap. Whenever market is filling the gap, it will try to make a top. You could call it as a high, it will try to make. So some people, what they will do is, when the market fills the gap, suddenly if there is a red candle appear, they will square off the C trade, and they will allow the red candle to go down as much as it can. But those who have strong feelings that no market can cross this level, what you can do is you can exit the trade, wait for the market to come up, and again if it is trying to touch the high of this particular level, try to make one more entry here. Now what I would do is, this green candle, you could see it is trying to come up, so I will take entry over here in this green candle, and my stop loss would be, now here your stop loss will be big again, because market will not go very high, it will take time. So what market will do is, whenever market is trying to come down to take your stop loss, it will see which big candle appeared previously. Now let me show you the previous big candle over here. Okay, so this particular previous big candle, so what market will do is, it will try to break this level and make a top. It made a top, right? So this was the level, so it broke this level and made a top. And what it would do is, it will try to take your stop loss. So mostly what people will do is, people will try to put stop loss below this big candle. So that's why market will come till here. You could see market came till here to take your stop loss, because market knows that people will not put their stop loss here, they will try to give a big stop loss. So they will see the big candle and they will put a stop loss below that. So market will come to exactly till that level to take your stop loss. So here market came down, took your stop loss, and again market went up. So when this is happening, understand that this is a uptrend. Okay, so now uptrend cannot be from 9 o'clock till 3:30, right? It can be or it cannot be. So max we can say that when market came till this level, what was the time here? 12:50. Till 12:50 market was going continuously upside. Okay, so make sure that after the market gets open at 9:50, so 10:15 and 11 and 12, so first 3 hours it will go most of the time, not always. First 3 hours it will go in one direction. After 3 hours there is a probability that market will become sideways. Sideways means a liquidation will happen. It will be in one range. Now this is, we can call it as a break time of candles. So how we have lunch time, so like that, the break time of candle. So this will be the sideways market. Whenever market is becoming like this, not going up nor going down, so that's the time you can exit your position. Don't stay here, because this is a very crucial level. You will not know market is in this range only. Market is in this range only. Now you will not know whether market will cross this or market will cross this. So if it cross this, we can look for C trade. If it cross this, we can look for P trade. So this is indefinite. We don't know what will happen. And you have to also see the time. Now till, this is just my observation again, till 2 o'clock, if market is not breaking this level, then there is a less probability that it will go up. Only by 3 o'clock it may try to go little bit up or little bit down. So when the market is sideways for long time, now here it started at 12:30 the sideways, and it was sideways till almost 3 o'clock. So when the market is sideways for more than 2.5 hours, that's the time. Don't expect market will go up or market will go down. It will be somewhere in this small region. Okay, so when the market is in the small region, the only expectation can happen is during 3 o'clock. 3 o'clock it can give a move up or it can give a move down. But again, if you are beginners, then I would not advise you to take trade at 3 o'clock, because it is risky. So if you have practice taking trade at 3 o'clock, then only you can take. So this is how you had to do the analysis, and don't take position for next day. You don't know what the hell will happen next day. So don't take positions overnight. One time it will give you big profit, but the other time it will take everything from you. And one more thing I would like to tell you, that some beginners, they don't study the chart and they take trade. So what will happen is they will get good profit. They will get 50, 60, 70,000, whatever it is. Whenever you get good profit, if you are taking overnight positions and keeping it for 1 week, whenever you are getting good profit, suppose if today market is uptrend and I got 80,000 profit, what I would do is next day reduce the quantity size. Don't increase the quantity size. It will take 30% of your profit back, because when the market gives good move one day, the next day it will become sideways and take your money back. So whenever you get good amount, 50,000, 80, 90, 100, I would suggest you don't trade the next day. Next 2 days don't trade. But if at all you want to trade, try to trade with only one lot, because I've seen people who have earned lot, but they have also given back to the market. And if you have 100 rupees earned, the next day market is taking 60 rupees or 50 rupees, you may think that I still have 50 back, I'm still in profit, but why you want to give that 60 rupees back to market? So try to save that 60 rupees. Don't give whatever market has given, don't give half of that back to the market. So you have to play smart. So whenever there is a good move, next day it will be a bad move in the market. So save your profit because every day there is a market. Don't rush, save your profit, and that's how by the end of the month you will have good amount in your bank account. So thank you for watching. If you like this video, subscribe and send me a message. I would be glad to read your comments. And if you have any question, leave me a comment. I will try to answer. Thank you for watching. Have a blessed day.